Hi there, I'm Irked and this is my channel, Get Irked. In this episode, has Bitcoin bottomed in this crypto winter, or is there a lot more downside in store? In my last update about Bitcoin in June, I said it was possible that it could sell off to as low as $4,000. In fact, it's always possible. Anything's possible. So now, after the FTX fiasco and Bitcoin crashing from where it was, what's left for Bitcoin from here? If you pay attention to my Twitter account, which is @GetIrked, you will notice that back on October 18th, I posted this tweet with a chart that showed where Bitcoin was at that point in the cycle and how it looked a lot like it did in 2022. Now, I didn't mean to get this close, but Bitcoin actually ended up crashing one day different from where it did in 2018, as you can see in my updated chart. You'll also notice that it didn't end up bottoming until December 15th of 2018. And I think that we're in for that kind of a sell-off here. I have many Bitcoin bros who come after me and say, dude, why are you so bearish about Bitcoin? You must hate it. Well, that's actually not true. I'm a long-term hodler in the space, and I actually believe that Bitcoin will go up into the future. But here's the thing. If we go back to that chart that compares where we are now to where we were in 2018, the same thing happened then. Technical analysts love to say, show me the charts and I'll tell you the news. And although that's a little bit true to a point, there are news events that'll come out that'll break all technicals. And in 2018, it was a fight between two forms of Bitcoin Cash. That's the funny thing about this space. 4 years later, and Bitcoin Cash is insignificant. But at that time, there were two teams. One who wanted to create Bitcoin Cash as a fork a certain direction, and one that wanted to go the opposite direction. And they went to war against each other and sold so much Bitcoin that we saw it drop from $6,000 all the way down to $3,000. And that was a drop of more than 50%. Now you might be telling yourself, well, that's okay because Bitcoin's already down more than 70% from its high. But you have to remember where Bitcoin was in 2018. Bitcoin had already dropped from its high near $20,000 to a rough low of around a 70% sell-off at $6,000. And for months and months, people thought that $6,000 was the bottom. And then it sold off 50% from there. If we move to 2022, you can see that a sell-off from its all-time high to what we thought was the bottom was once again slightly around 70%. And even though right now we've already sold off an additional 20% plus from where we thought the bottom was to where we are now, that's not 50%. A 50% sell-off from its most recent high to where it would be a low gives us a price target of between 10,500 and 10,700. However, it's worth remembering this time around there are a lot more players in the space and there's a lot more leverage. We don't know how bad the FTX fallout could be. It could take a lot more players out of the space. If we can make it through mid to late December without seeing a significant drop from our current levels, I'll actually get a little bit more bullish on the space because timing does have a little bit to do with Bitcoin's patterns. However, it's also worth remembering that back in 2018, when Bitcoin sold off in November, it remained in crypto winter for an additional 140 days. It didn't recover until April of 2019. Since our timeframes are very similar right now, I don't care how long we've been in the bear market. Once it has the final capitulation sell-off, wherever the bottom is, I believe we've got about 3 to 4 months where we'll be down there. That gives us a recovery target somewhere between the late first quarter of 2023 and early second quarter. And that's the point where I'll get really bullish if things don't look a whole lot different than they do right now. In the meantime, the key thing to remember when it comes to Bitcoin is to have patience. Even though it does look really exciting on the daily price targets and you can see a lot of volatility, it's best to look at it in the weekly or even the monthly price targets when you're a long-term holder in the space. It's at this point that I want to do a public service announcement. Make sure you get a hardware wallet of some sort so that you can get your crypto off the network. You cannot keep it on any exchange, and this even includes the major exchanges like Kraken, Coinbase, or Gemini. I don't trust them. Personally, I do use two exchanges. I use Coinbase and Gemini, and I have links in my show notes where if you click it, we both get a little bit of a referral bonus, but to be honest, I don't trust either of them. I immediately take any crypto I buy off of those exchanges, and I only keep as much USD on the exchange as I need to make my next two buys. The problem with a trustless network is that you can't trust anyone. Even though Coinbase, Binance, Kraken, and Gemini have all shown records that supposedly demonstrate that they are one-to-one with the Bitcoin on record, so did FTX. You cannot trust any of these exchanges. So how do I determine any of this? Well, we can take a look at my own chart, and as you can see, I use a whole variety of a bunch of different things when I'm looking at the price targets that I have for Bitcoin. This is my daily chart, and for a lot of technical analysts out there, this can look incredibly busy, but everything that I have here is just to show me my own view of what I think might happen and which way I think it might go. This brings up an important point. Whether you're following a Bitcoin bull or whether you're following a Bitcoin bear, I'm going to have a spoiler alert for you right here. They're both wrong. Instead of having a thesis for which way I think the asset's going to go, I have a plan. What am I going to do if Bitcoin goes higher? And what am I going to do if Bitcoin goes lower? But your chart doesn't need to look all wonky like this. Let me show you how to take a look at a chart and just kind of get an idea of what you might do as a buying plan. This is Bitcoin's monthly chart on Gemini, and you can see it hit a high here at $69,000 and recently hit a low in November down here at $15,460. The way you use charts to determine levels of support is to look where there's a significant amount of price action in the past. You can use key pivot points like these on the monthly chart. These are where the stock or the asset, in this case Bitcoin, came down, hit a bottom, and capitulated. What that means is that there's potentially a lot more buying support at those levels if Bitcoin gets that low, but you can see these two lows are 58.73 and 38.58. So we'll keep track of them, but those aren't going to be our next buy targets. If we move further up, you can see that on this month here, we got a low at 98.13, and over here during 2019, we saw some significant lows here at $7,300 or around there. We can also switch to the weekly so that we can find more capitulation levels. And if you look in the past, you can see that there was some significant capitulation here. There was another key bottom here, and now we've got even more buying targets, but we might want even more. So if we switch to the daily view and we pull back, we can see that on certain days that it did pull back more significantly than others. For example, this one, which was not picked up on the monthly or weekly chart, saw a bottom at 81.85. But you can also see between our bottom right now at $15,460 and the bottom at 98.13, there isn't a huge amount of support. Now, I might do some buys in here, and I might do some buys around here, but the way that you protect against further downside is to change the quantities that you buy. You can choose to buy in a set dollar amount, or you can choose to buy as a percentage of your allocation. But the way I do it is I create a plan so that as it gets lower and lower, I'm always down only a certain percentage. It might sound crazy, but I don't ever want to be down more than it would take a double to get me to break even. Now, anybody who's a stock investor will think that's insane in its own right, that you'd let yourself be down so much in a stock that it would need to double to break even. But I've been in Bitcoin for a very long time, and this is an asset class that can go up 1,000%. If I lose 100 or 200% of a 1,000% run, that's not the end of the world for me in order for me to get my allocation timed incorrectly. This is what my Bitcoin trade planner looks like, and you can see I enter in how much of a percentage it drops from its all-time high, and that gives me key levels. Sometimes I'm using trend lines to determine the different price targets that I have, and sometimes it's levels of support and resistance. You can also see that the percentage of allocation that I put to work is a certain amount, and I just have it at a set amount until we get down to a point where I have to put in more to maintain that key target that I want of only being down 50%. As we go lower and lower, you can see that I have a price target as low as the bottom in 2018, down here at 31.50, as well as 3 additional price targets at key levels of support from Bitcoin's past before 2017. And you can see as we get down to that point, I reduce the amount that I'm buying. And this is because I don't believe the likelihood of seeing those targets is high. So I want to make sure I have the majority of my allocation put to work at much higher price targets. If you like this video, please hit like and subscribe, and I'll see you in the next video.